Good morning, everyone. Welcome to the every Sunday Big Tech Update, where I do more detailed update on the six big tech stocks, and I'll be breaking them down today in terms of their support and resistance levels, and as well as what's the most likely scenario that I think they will be heading into going next week. And that will be Nvidia, Tesla, Apple, Amazon, Google, and Microsoft. And before we start, I just want to thank everyone for all the supports and watch hours, subscribes, likes, and shares because I just hit 1,000 subscribers. And I know that's not a lot in terms of any kind of revenue because the channel is still not monetized. So we are a finance channel. So I would like to talk to you a little bit about it. I took a quick look on it, and roughly the ad revenue for when you partner with YouTube is roughly $2 to $30. So we just take the average, so roughly $15 per thousand view. So on my channel currently, there is roughly 42,000 views, and channel's not monetized yet because we need 4,000 watch hours. So if we just take that, I roughly get about $1,000, so about 1,000 to 2,000 views a week. So we just times that by two because let's just take 2,000 views, and so that's $30 a week, and we times that by 52, so that's a year. So $1,500 a year is not a lot for anything, to be honest. But my trading fees cost more than $1,500 already a year, way more than that. So, but I do enjoy making these videos, helping everyone out, as well as it helps me look at things in the market that sometimes I miss, whenever, especially when I go over things again in these videos. So it's very helpful for me as well. And I just want to thank everyone for the support, and I'll be continuing making these videos, as well as probably in the future I'll be making more psychology videos because trading is a mental game. I would say it's an 80% mental game and your mental toughness and discipline, and 20% is on technical analysis. But as of now, we'll stick to the technical analysis for a little bit more, and let's get into it. All right. So Nvidia, we have looked at this rising wedge for a lot this week, and we had a bear break on the rising wedge and broke out of this support, but it's still holding on its prior support. So Nvidia needs to break this prior support for anything substantial of a bear move to happen, because if it doesn't, the structure of the chart is still very healthy in terms of overall on the bull side. So as long as we hold this 240 level, bulls are still in full control. But the thing is that we saw on Friday where Nvidia was down 2% and QQQ, which is the tech sector, was only down 1%. So it's starting to be a little bit relatively weaker for only one day, and one day here as well. So if that continues, then we can say that Nvidia potentially set as top if it starts to continue to be weaker. So how do we tell from the relative weakness to relative strength? Just do Nvidia divided by QQQ. And you can see this day, just from Friday, it's weaker, meaning QQQ outperformed Nvidia. So you can see only that one day there. So we got to see more weakness before we can say potentially Nvidia is top. Something like this, where it was weaker for that little period. I want to see that again over here for it to be able to say potentially mark the top for Nvidia. But as of now, no signs of that yet. So 420 is the very first level. I want to see it break for bears, and for bulls, if we bounce off 420, we're heading up to all-time highs again. We're going to be testing this zone 433 and back testing, as well as that rising wedge support. Now it's going to act as resistance. We were under it. You can see on the 4-hour time frame we have back tested it. See, we bear break here, retest it, acting as resistance because under it, rejects from it, retest again, rejects from it. We have rejected from it twice already after bear breaking out of that. And you can see once we rejected from that again, Friday, it was just a straight sell off. So yeah, 420 key level for bulls to bounce off of, for bears to break through. If we do break through 420, it's a pretty easy way down to I'm going to say probably 412 to 404, because there's not a lot of support on the way. because you can see this is it. This is a one straight move up and a little bit of here, and that's it. Because there's no other price action in history or any kind of support, because we are trading in the all-time highs range for Nvidia. So yeah, I would say this level of support is going to be a lot stronger than this one. This is just two candles there, but it can act as some form of support due to this was the previous all-time high. Big 420, we're likely heading to 404. Bounce off of 420, we're likely retesting this bottom wedge of that resistance. That gonna go to all-time highs, new highs, and if we do hit new highs, QQQ is probably hitting new highs. But at the moment, we'll have to see. Take a look at my QQQ market breakdown on Friday. So I did analysis on S&P 500 and QQQ on Friday video. The one that says Apple, will Apple mark the top for us? Yeah. All right, let's take a look at Tesla. Tesla is looking like a daily head and shoulders as well, but S&P 500 head and shoulder played out bearish break, but let's see if Tesla will break or not. So this is the daily time frame, and this is the left shoulder. That's the head, and this is the right shoulder. So it just means if it confirms a break, it's a uptrend into a daily downtrend if we do break that neckline. At the moment, we have not broken that neckline. So zoom into the 4-hour time frame, you can see it's a much more clear head and shoulders right here on the 4-hour. So it's really clear, and so we just gotta break down this neckline right there. So if we do hold this 248 low, then it's not a 4-hour downtrend. So as long as bulls can bounce off of here, then they are looking good. The next bounce sets a lower high, meaning this high is lower than the previous high, just like how this one is lower than this one. It could mean that sellers are potentially gonna break that level on the next drop. This is usually how it works. Seller wants to sell here. Now it's cheap enough for buyers to buy, and we just bounce a little bit, but then there's no buyers left. Bounce a little bit, and there's no more buyers left. Nobody wants to buy these levels. It's just becoming cheap, more expensive for them. That's essentially the psychology of it. When we make lower highs and lower highs and lower highs, it just means lower, lower, lower. The opposite happens if it's a more of a bit bullish psychology behind it. Yep, so this would be my key right here. 248.26. Break that. We are confirmed our very first 4-hour downtrend since a long time. This is one move. That would be a 4-hour downtrend right here. One move, bounce, 4-hour downtrend. Yeah. So that's been like 2 months. So April to actually 3 months. So yeah, that'll be a 4-hour downtrend in roughly 3 months. If the bears confirm that, then obviously that'll be a notable shift in terms of the chart, because we haven't gotten one of those downtrend in a very long time. But even if we do get a downtrend here, 4 hours, right? It doesn't mean we're gonna just drop all the way down here and it's over for the bulls, right? It just means it's starting to favor the bears a little bit more. We drop down here, so we break these level, we come down here, right? Break through these levels. This is not a lot of support in this here, and then we bounce off of here. And we can just chop around sideways. Next thing you know, we go into quarter 4, which is a bullish, more bullish quarter. We come back up. We test the all-time highs. 2 hikes, right? So, meaning that we form an hourly 4-hour downtrend is over for the bulls. But as of now, this is what's forming up. This is a bearish pattern, and we'll see if the bears can break it. If the bears cannot break it, then we do this thing where it bounces a little bit, and then bears break it, and then nobody wants to sell anymore, and bulls buy the dip, bounce back to this range, then we're likely testing this prior high again. It just means bear, break, lack, follow through, and nobody wants to sell anymore, and bulls just buy it back up, and shorts have to cover. Essentially, then that will be a good sign for the bulls. We're continuing this move back up here, and we will likely retest this again up to this 275 zone. Probably a slight, dip here, and then go higher if that happens. That would be the most likely scenario if we can't even break the zone. All right, Apple. Apple is just a monster chart that this is the weekly time frame. This is the weekly move, one move, weekly consolidation, one move. So you can see how huge of that one move is overall. 30% on one move on the biggest stock in the market because we had no consolidation yet. Actually, we had a little one here. It's a consolidation right there because we had a candle closed lower than prior than candle. So one move, a little bit of consolidation, and one more move. So most likely scenario now is that the market is likely looking for another kind of like consolidation like this, where one candle is gonna go below the prior week's candle. So maybe it's something like this. And then if it wants to go higher, QQ wants to hit all-time highs, then it will likely continue. And as long as this 2-day time frame EMA 12, the teal looking line, so indicator, click indicator and type exponential moving average and type this number 12 in, is holding, bouncing every single time, bulls are in absolute full control. We haven't even tested that 12 EMA for the past since May 24th. So it's been a month that we haven't even touched it. And 12 EMA is, if it's just trending on 12 EMA, it's a very strong momentum because it's the smaller the EMA, the closer to the price it would be. And 12 is a pretty small number. And so that's quite strong momentum, even if you haven't even tested it for whole months. Oh, we'll see when Apple pulls back slightly. That'll only be like probably like 1.5%. Let's see here. Oh, wow, it's 3%. Okay. So if we pull back 2.5%, we'll touch the 12 EMA. And if Apple pulls back 2.5%, QQ is going to be down probably 1.5% roughly. So yeah, so once we come back to it and we bounce off of it again, then bulls are still in full control. My guess is that it's probably going to come down to it. The first time it touches it, it's going to bounce because we haven't even tested it for a month. It's going to be at least a slight bounce, at least 1 day or 2 days, and then we'll have to see if the bears are going to be serious about taking it, breaking it below that, setting that lower high or not. If not, they're not serious about that. It's just going to bounce, and we're probably going to go to new all-time highs for Apple because there's zero red flags in this chart at the moment, and we'll see. We will see if they can do it. And it's still bouncing off of even just on the daily, the 1 day time frame. You can see. So if it breaks the 1 day 12 EMA first, then we zoom out to the 2 day. But 2 day is more 2 day is more clear for us. You can see sometimes we break through it on the 1 days. So once we break through on the 1 day, then we zoom out to the 2 day. But 2 day is the clearest one for me. Right, Amazon. So Amazon is looking great. Guess it actually break out of this cluster of sideways action. Whenever there's a sideways action, it's in a zone. When it breaks, it's gonna break with volume and a big move. So that's exactly what happened here. See, big volume come in once we break this resistance zone right there on the 127, and you can see we have shot up. And actually, bulls held quite well on the back test. So you can see right when we got into this low of Friday, 128.28 coincides exactly with this high of this 128 level. So that's where bulls held on the dip here. But upper wick is not ideal, but still we had a really strong move on Thursday. So sideways action is ideal for the bulls. We zoom into the 15 minutes, take a look at that area that we bounced off of. See, that was in the morning. So yeah, this was looking good right when we morning came up. When it rolled over with QQQ at later in the day, starting to tighten up. Let me see if I can see an equilibrium here. Yeah, it looks like an equilibrium. Just a little bit like an equilibrium forming up for us. Yep. So we'll likely break Monday. So it's just tightening up, big move into a tightening move. And once it finishes tightening up, it will likely break whichever it wants to break. But when we breaks, that will have volume come in because, like I said, tightening range into contraction into expansion. That's how it works on these charts when we see them tighten up. That'll be a visual guide for us. We don't have to play off of the exact levels on these lines, especially these triangle looking lines. But that's a visual tightening range guide for us to watch for into Monday. And of course, that QQQ is going to be key. And make sure to check that QQQ video on Friday because QQQ is going to be leading these stocks. Actually, these stocks are going to be the same thing. These stocks lead the QQQ, these stocks because these 6 are the biggest weightings in QQQ. All right, and if we do break that this wedge on the 15-minute tightening range bearish, we're coming back down to test this support 127 because this is only one candle support right there. It's not a lot. So if we do break that, I'm looking at the support first. And if we break through down here, that's a red flag, a huge red flag, because we chopped around for one whole month and we broke bullish. And you're telling me that we only get to stay up here for one day, and we're now back in this chop zone after that bull break. Then that's a red flag for the bulls. And obviously, if the bulls bought the dip here and we bounce back, then that's a good sign. So for the bears, we want to break back into this range. And for the bulls, you want us to obviously hold that wedge, 15-minute wedge, and break bullish there. All right, Google is looking the worst out of all the big tech still, and even though it's bounced back into this chop zone, it's just indecision here. So you can see this sideways zone here. We finally bull break here, and bull said, "Just kidding," and the bears sold it right back into this zone, into the low of the zone actually. So that's a red flag. But then we had a daily downtrend confirmed for the bears, right? A bear break onto the out of this range, just exactly like this bull break. And the bears just said, "Just kidding," and the bull spot the dip, right? So we don't know which way this guy wants to break now anymore, right? It's like just kidding on both sides, like, and now we are back in the zone again. So we'll just have to see which way it wants to break in the zone. But it's still favoring the bears at the moment because we are at the low of this range, right? The absolute low of that range. So once we can just get a 0.5% red day tomorrow. Okay, 1%. We'll be out of that range again. A daily downtrend confirming lacking follow through, but it's still in a daily downtrend because bulls have not bought it enough over that prior pivot. If we bounce over this prior pivot, then this daily downtrend becomes a neutral trend. So right now it's still a daily downtrend, so still the weakest of them. So we have to watch for this. So is Apple, Amazon, and Nvidia and Tesla going to join Google on the more bearish side of the chart, or is Google going to get pulled back into the bull side by those other bigger guys that their chart are still looking very bullish, right? So let's take a look at Microsoft. Microsoft is the second biggest after Apple, so this one's going to be key as well. And Microsoft is starting to look a little bit cracks in the of it due to the size of this pullback, 5.4% now. So just like Google, that big pullback, now this bounce, bears are looking for that lower high to set up because of how big this pullback was. Next bounce, if we don't even retrace over 0.382 of this bounce, it's a daily bear flag. We just closed right on top of it. So Microsoft, if it can bounce over that, then it negated that bear flag, and it potentially, the next drop, potentially set that higher low. But as of now, if we do get a red day on Monday, then it could potentially shape up that daily bear flag, confirming. Obviously, got to break this prior low first, that 332, for that to confirm. Those are these two, Microsoft and Google, are starting to show a little bit of cracks for me, and we'll see if this Microsoft shapes out a downtrend. Then I'm going to say Apple is probably going to follow a little bit, going a little bit weaker into next week for QQQ. All right, that's all I got for you guys. If I got any questions, feel free to comment below. And feel free to subscribe so you made it this far. And I'll see you guys tomorrow for the market update. Have a great rest of you guys' weekend.